Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 155, recorded here on February 23rd, 2025. We are at block 885012, Moscow time, 1044. Fees are quite high at 1213.14, so better wait to consolidate. We will start with the market news update outlook, and then we will get into the weekly top Bitcoin news, and we will check out this week's featured post on the Bitcoin Fortress Substack, and then we'll finish up with boosts. So with that, and of course, do your own homework. No investing advice here. Let's get started. First, with the market news, Wall Street on Friday slipped to a loss for the holiday shortened week as sentiment took a hit due to weak economic data, another Federal Reserve signal that there would be no more interest rate cuts, tariff developments, and a weak guidance from the U.S. consumer bellwether, Walmart. Still, the benchmark S&P 500 index did notch its second and third record closes of the year. U.S. President Donald Trump continued to garner headlines. On Tuesday, he said he would probably announce 25% tariffs on imports of cars, semiconductors, and pharmaceuticals on April 2nd. So you better buy that BMW now, or the Lambo, or whatever. Meanwhile, minutes of the Fed's January Monetary Policy Committee meeting showed that policymakers wanted to see further progress on inflation before adjusting interest rates. Inflation will be in the spotlight next week with the release of the January Core Personal Consumption Expenditures Price Index, widely seen as the central bank's preferred inflation gauge. For the week, the S&P 500 slipped 1.7%, while the tech-heavy Nasdaq Composite slumped 2.5%. The blue chip Dow also shed 2.5%. And looking ahead, investors this week will be on the lookout for the print of the PCE price index on Friday. That's the Fed's preferred inflation gauge. The second estimate for fourth quarter gross domestic product in the US is due Thursday, along with durable goods data for last month. The highlight of next week's earnings calendar will be the world's most valuable chip maker, NVIDIA. On Wednesday, analysts at KeyBank Capital Markets expect the company to offer up, quote, strong results and guidance when it reports quarterly results next week, despite the GB200 NVL constraints it has faced. So fire up the casino. Other notable earnings names include Home Depot, Intuit, Salesforce, and Workday. All right, jumping into the weekly Bitcoin news, we have block 885000, important news of the week from No BS Bitcoin. Thanks, guys, for getting that out in time for the podcast. The Human Rights Foundation has donated $250,000 to OpenSat's operational budget. The funds will be allocated to ensure essential operational functions of the organization. OpenSats is a powerful force for good in the world. Their largely volunteer driven team has an outsized impact, and HRF is thrilled to support their important work with this grant to help sustain their operations, said Christian Carolus, Director of Financial Freedom at the HRF. Bitwise has donated $150,000 to support open source Bitcoin developers. The funds will be divided equally, with each receiving $50,000 among Brink, OpenSats, and the Human Rights Foundation. Thank you to the investors who've chosen Bitwise and BITB among many options. This donation is made possible because of your choice. We hope you're as proud as we are to support Bitcoin open source developers, said the company. The Bybit exchange lost over $1.46 billion worth of ETH from one of its cold wallets. The attack, attributed to North Korea's Lazarus Group, constitutes the largest exchange hack in history. The exchange remains fully functional as its operations were not affected by the incident. Nigeria freed Gambarayan in exchange for access to U.S. financial surveillance capabilities. Nigeria appears to have exchanged Binance executive and former IRS criminal investigator Tigran Gambarayan for access to U.S. resources and expertise in financial surveillance capabilities as part of a secret deal with the U.S. State Department, reports The Rage. Well, I guess it's not a secret anymore, is it? Binance sued for $81.5 billion in Nigeria. Nigeria's Federal Inland Revenue Service sued Binance for $79.5 billion in economic losses and $2 billion plus interest in back taxes, alleging that Binance has a, quote, significant economic presence in Nigeria and therefore should therefore be liable for corporate income tax. FIRS also claimed that Binance allowed $26 billion in untraceable funds to leave the country during a foreign exchange crisis. Uh-oh. The government is cracking down over there. Kraken discloses 40% surge in law enforcement data requests. The exchange received 6,826 requests in 2024, reflecting a 38.6% rise from the previous year. U.S. SEC to dismiss Coinbase securities lawsuit. In 2023, the Securities and Exchange Commission sued Coinbase, Binance, and Kraken for running unregistered securities platforms. uh, SEC staff has agreed in principle to dismiss its unlawful enforcement case against Coinbase, subject to commissioner approval, righting a major wrong, said Coinbase's Paul Grewal in a blog post. FTX has repaid $1.2 billion to its first group of creditors. These creditors who were owed less than $50,000 each received their payments on February 18th. Under FTX's bankruptcy plan, 98% of creditors will receive at least 118% of their claim value in dollars rather than cryptocurrency, based on the value from 2022 when the exchange declared bankruptcy. So they will miss out on all of that appreciation in Bitcoin since then. US SEC launches a crypto and AI fraud enforcement unit. The Cyber and Emerging Technologies Unit is set to replace the Crypto Assets and Cyber Unit and will be led by Laura Dayard. It will focus on combating cyber-related misconduct and protecting retail investors from bad actors in emerging technologies. Well, there certainly are a lot of those, especially in the shitcoinery. Argentina's Milei, speaking of shitcoinery, is facing fraud charges, impeachment calls following a failed meme coin launch. Opposition lawmakers in Argentina are pushing for impeachment, claiming the scandal has embarrassed the country on the international stage. The country's fintech chamber suggested that the incident might be a rug pull. Milei's administration announced yesterday that it would initiate its own investigation into the token project. Oh boy, politicians. You just can't trust them. Ross Ulbricht calls to free Roger Ver. Roger Ver was there for me when I was down and needed help. Now Roger needs our support. No one should spend the rest of their life in prison over taxes. Let him pay the tax, if any, and be done with it, Ulbricht said on X. Howard Lutnick sworn in as U.S. Commerce Secretary. President Donald Trump said that Lutnick's priorities will be focusing on job growth, while adding that Lutnick really understands something about business. Georgia has introduced a Bitcoin-only reserve bill. If approved, the new SB 178 bill would permit investing up to 5% of public funds in Bitcoin, reports Atlas 21. Abu Dhabi has invested $437 million in BlackRock's iShares Bitcoin ETF. The Mubadala Investment Company, a sovereign wealth fund from Abu Dhabi, purchased over 8.2 million shares of BlackRock's iShares Bitcoin Trust. This purchase was confirmed through a 13F filing with the US SEC, reportedly making Abu Dhabi the first government-backed institution to invest in a Bitcoin ETF. Fold has become the first Bitcoin financial services firm to trade on NASDAQ. The Bitcoin Rewards app went public through a SPAC merger with NASDAQ-listed FTAC Emerald Acquisition Corp. The company holds 1,000 Bitcoin on its balance sheet, worth $96 million. Metaplanet purchased an additional 68.59 Bitcoin at an average price of $96,335 per coin. It now holds 2,100 Bitcoin. Altvest Capital buys 1 Bitcoin to become the first publicly listed company in Africa to hold Bitcoin as a reserve asset. The South African investment firm said it doesn't plan to hold any alternative coins. Well, shout out to them. The Bitcoin mining industry has created over 31,000 jobs in the United States. A new report by the Perryman Group highlights that the U.S. Bitcoin mining industry and related utility activities contribute over $4.1 billion annually to the gross product when multiplier effects are included. The industry also supports over 31,000 jobs, factoring in these multiplier effects. The state of Texas leads in U.S. Bitcoin mining, contributing $1.7 billion in gross product and over 12,200 jobs. Georgia follows with $316.8 million and 2,300 jobs, and New York with $225.9 million and 1,600 jobs annually. And there's a nice little table here in the article if you want to check it out. Links in the show notes. Club Lab's fifth startup day to take place on March 13th in Austin, Texas. Learn more about the event here. There's a link. Bitcoin Plus Plus Hack Edition took place in Florianopolis, Brazil. Recordings of the talks and workshops are available in the agenda, and there's links in the article for that. And the Swiss Bitcoin Conference is a Bitcoin only event taking place in Kreuzlingen on Lake Constance from April 24th to 27th, 2025. Get your tickets here, and there is a link. Moving on to Hodler's Digest from Cointelegraph. This is from February 16th to 22nd. And let's take a look at what the stories are. We'll try to skip over the shitcoinery unless it's funny. Bybit exchange hacked over $1.4 billion in ETH-related tokens drained. I think we've heard about this one already. Let's see if there's anything new here. Cryptocurrency exchange Bybit has been hacked for over $1.4 billion in liquid staked Ether, mantle staked ETH, and other ERC20 tokens, according to pseudonymous on-chain security analyst Zach XBT, who spotted the incident shortly after it occurred. Following the exploit, the on-chain sleuth warned users to blacklist addresses associated with the hack. Bybit co-founder and CEO Ben Zhao confirmed the incident and provided an update on the security breach. Zhao confirmed that a transfer was made from the exchange's multi-signature wallet to a warm wallet approximately 1 hour prior. The CEO also said the specific transaction was masked to appear legitimate but contained malicious source code designed to alter the smart contract logic of the wallet and siphon funds. Those North Koreans, boy, they are tricky. That's why you just, don't keep your coins on an exchange. Self custody, please. SEC agrees to drop enforcement case against Coinbase. Already heard about that. Ross Ulbricht calls for Bitcoin Jesus Roger Ver to be freed next. I don't know, Roger Ver. I don't really like that guy too much, but yeah, he should pay his taxes and then he can be a free man. SBF cozies up to Republican Party amid clemency push. Oh boy. Former FTX CEO Sam SBF Bankman-Fried has spoken out from prison about his political donations, citing a political shift following high-profile contributions during the 2020 United States elections. By the way, they dropped that case against him because he was already, facing a lot of time in jail. All the political donations to all the politicians that he made. In an interview with the New York Sun, SBF said he gave money to the Democratic Party in the 2020 election to prevent the political faction from becoming the party of Bernie Sanders, a Democrat senator from Vermont famous for his socialist views. The former FTX executive briefly outlined his rightward political shift over the last several years. SBF told the interview, I would say that I viewed myself at the time as a sort of center left, and that is not how I feel myself anymore. It is not how I came to view myself in 2022. So please let me out of jail. Let's see, we already heard about this. Nigeria, $81.5 billion lawsuit against Binance Exchange. Time for the status to shake down the crypto guys. Let's see. XR pre-price, don't care. Ah, woman who defrauded Bybit of $5.7 million gets 10 years in prison. They've been having some problems lately. A woman who falsely amended payrolls and defrauded $5.7 million from the crypto exchange Bybit has been sentenced to nearly 10 years in prison by a Singapore court. The Straits Times reported on February 20th that Hokai Zin was handed a 9-year, 11-month sentence after she pleaded guilty to 44 charges, including 5 cheating charges, along with 8 counts of dealing with the benefits of criminal conduct. Ho committed the offenses while working at the crypto networking platform WeChain, which handled payroll for Bybit. Ho led the payroll team. She was sentenced to 6 weeks behind bars late last month for contempt of court after she spent the ill-gotten funds despite the court ordering her otherwise. Ho's nearly 10-year sentence will start after she completes her current sentence, which started on January 27th. Argentine President Milei arrives in U.S. amid fallout from Libra scandal. Yes, he's a shitcoiner. This is interesting. I actually wrote a piece on this coming up in the next week or so in my blog about pig butchering scams, which stole $5.5 billion from crypto investors in 2024. Pig butchering scams have emerged as one of the most pervasive threats to cryptocurrency investors, with losses in the billions of dollars across 200,000 identified cases in 2024, according to a report from on-chain security firm Cybers, shared exclusively with Cointelegraph. Pig butchering is a type of phishing scheme that involves prolonged and complex manipulation tactics to trick investors into willingly sending their assets to fraudulent crypto addresses. Pig butchering schemes on the Ethereum network cost the industry over $5.5 billion across 200,000 identified cases in 2024, according to the report. Among the top 10 most affected platforms, Cybers identified 3 of the 5 largest centralized exchanges, a crypto-friendly bank, and an institutional trading platform. So be skeptical and you trust, but for sure verify. Okay, next up from Bitcoin.com news. Let's see, this was posted today. President Trump declares end to Biden's crypto war, pledges U.S. Bitcoin dominance. Trump declared an end to what he termed the Biden administration's war on Bitcoin and crypto during a keynote address at Saudi-backed Miami's FII Priority Summit this week, positioning his administration as a catalyst for U.S. dominance in digital currencies. The 47th president highlighted his commitment to making America the crypto capital of the world, citing Bitcoin's recent all-time highs as evidence of market confidence in its economic agenda. Speaking to global business leaders and foreign dignitaries, Trump linked economic growth to broader revitalization. Since the November election, America's economic engines have come roaring back to life in just a very short period of time, he said, highlighting a nearly 10% surge in the NASDAQ and Bitcoin's multiple all-time record highs. He praised Miami as the center of the action for crypto innovation and hinted at deregulatory measures to attract blockchain investments. Trump also spotlighted his newly established Department of Government Efficiency, a cost-cutting initiative spearheaded by Elon Musk. The department aims to eliminate wasteful spending, with Trump proposing to redirect 20% of savings to taxpayers and debt reduction. We're saving billions every single day, Trump claimed, crediting Musk's high IQ and tech expertise for ensuring transparency. While short on specifics, Trump tied Doge's mission to fostering a pro-business climate for crypto expansion. The president sharply criticized Biden-era policies, blaming crushing regulations and rampant inflation for stifling innovation. He contrasted this with his administration's hiring freezes and foreign aid pauses, framing them as foundational to a golden age of American prosperity. Trump also lambasted international aid programs, citing examples as misplaced priorities now being redirected toward domestic initiatives. Trump's pro crypto rhetoric drew applause from attendees, including Saudi officials and tech executives. He closed by reiterating his pledge to keep the U.S. at the forefront of everything, and one of them is crypto. So bullish. Next up is from CoinDesk. This article was posted on February 18th. Bitcoin slumps below 94,000, but one analyst says 500K forecast remains in play. The desultory price action in crypto continued on Tuesday, helping to drag Bitcoin closer to its lowest level in several months. In early afternoon trading hours, Bitcoin was trading at 93,600, lower by 2% over the past 24 hours and off 10% over the last week. The broader crypto market, as defined by the CoinDesk 20 index, was down 4% over the past 24 hours. Hitting that index was a 16% decline in Solana, which is feeling the pain as the meme coin market may finally have reached peak grift and or outright criminality over the weekend, with the rug pull involving Argentine President Javier Milei. Solana is now down 35% over the past month and has given back all of its post-Trump election gains. Shitcoinery does not win. Standard Chartered's Jeff Kendrick has previously said he expects Bitcoin to eclipse $500,000 by the time Donald Trump leaves office. Looking past the lame short-term price action, Kendrick, in a morning note on Tuesday, said the recent slate of 13F filings regarding institutional ownership of spot Bitcoin ETFs gave him hope. The type of buyer has evolved from retail to hedge funds and now to banks and sovereigns, said Kendrick, noting a boosted ETF stake from the likes of Goldman Sachs and the initial purchase of a Bitcoin ETF by Abu Dhabi. Kendrick, going forward, we would expect more very long-term, long-only money to buy Bitcoin and would expect the Abu Dhabi position to be the start of much greater participation by sovereigns. Native tokens of protocols tied to the Solana trading environment weren't spared either. Tokens of decentralized exchanges Radium, Jupiter posted double-digit losses today, while liquid staking service Gito slid 7% lower, with all of them down over 30% from their Friday highs. The Solana ecosystem, which has benefited generously as a hub for meme coin trading and launching tokens, is grappling with the fallout from Libra, the latest scandalous pump and dump token launch that put several key figures in the Solana space, and even Argentina's president Javier Milei in the hot seat. Libra was released on Friday and zoomed to $4 billion market cap after Milei's X post saying the project would support small and mid-sized businesses in the country. The token then lost nearly all its market value as insiders cashed in $100 million and Milei backpedaled his support. Milei now faces fraud charges and a possible impeachment, and Solana-based Dex Meteora co-founder Ben Chow resigned after being implicated in the token launch. This is the latest sordid episode emanating from Solana's meme coin complex. Alex Thorne, head of firm-wide research at Galaxy, said in a Tuesday note, the report pointed out that sentiment towards meme coins began to erode since the Trump token. If sentiment weren't at rock bottom, the upcoming Solana unlock event, increasing the token's circulating supply, injects an additional dose of uncertainty in the markets. Estimates vary on the exact amount of tokens to be released into circulation, but one hedge fund analyst forecasted that some 15.725 million Solana, worth roughly $2.5 billion at current prices, will be unlocked over the next 3 months, with much of the tokens coming from the FTX's state holdings. If an unlock of this scale occurs, it could increase the circulating supply of Solana and potentially impact market dynamics, tokenomics analysts said in an X post. Historical examples of large token unlocks have often led to heightened price volatility. However, it's essential to note that the precise size of the unlock and the final date are still not publicly disclosed by any official entity. Sitcoinery. Don't do it. Okay, next up from Crypto Potato. This was posted on February 23rd. VanEck claims Bitcoin reserves could offset $21 trillion US debt by 2049. VanEck has predicted that the United States could reduce its national debt by $21 trillion in the next 24 years. The firm's analysts believe that this could be achieved by creating a 1 million Bitcoin reserve over the next 5 years. According to the asset management company, a US Bitcoin reserve could slash the national debt if the crypto's price increases to $21 million by 2049. This would represent around 18% of the total US debt at that time. If the US government follows the Bitcoin Act's proposed path, accumulating 1 million Bitcoin by 2029, our analysis suggests this reserve could offset around $21 trillion of national debt by 2049, said the institution's head of digital asset research, Matthew Siegel, in its latest report. VanEck's estimate assumes that the cryptocurrency's price will increase at a compounded annual growth rate of 25%, rising from $100,000 to $21 million per Bitcoin in the next 24 years, while the country's national debt climbs at 5% CAGR from $36 trillion at the end of 2025 to $116 trillion over the same period. Oh my goodness. The prediction aligns with the Bitcoin Act proposed by Senator Cynthia Lummis, reacting to Van Eck's proposal. The lawmaker posted on X, "Good idea." The Republican has been a vocal supporter of the idea of a U.S. Bitcoin reserve. She has previously advocated for the initiative as a strategy to address the $36 trillion national debt and bolster the U.S. dollar's global standing. She argues that the asset's rising value could help reduce the debt over the next 20 years. Lummis believes establishing this concept would correct past financial missteps and ease economic pressure on younger generations. However, the legislation that would facilitate the creation of the stockpile is yet to be reviewed by the Senate or House. Following in the footsteps of President Donald Trump, the concept of a BTC stockpile is gaining international attention, and several governments are actively considering its potential use. In Venezuela, opposition leader Maria Corina Machado supports incorporating the cryptocurrency into the country's supply, arguing that it could help recover stolen wealth and provide aid to its most vulnerable citizens. Switzerland is also exploring the possibility, with its national bank evaluating the coin's utility as a backup asset alongside gold. Similarly, Hong Kong's legislator Wu Jie-shuang proposed integrating Bitcoin into the country's financial reserves in December to enhance economic resilience. However, not everyone supports the idea. Former BitMEX CEO Arthur Hayes recently dismissed it as an impractical strategy that would serve political interests rather than ensure financial stability. Next up from BitcoinNews.com, this is an opinion piece. Sounded interesting. This was posted on February 22nd. Uncertainty is guaranteed. Bitcoin preserves wealth when systems fail. The Trump administration is reshaping the federal government with a clear vision to unleash a new era of American innovation and prosperity. So far, there's little reason to doubt that this agenda is taking shape. Economic revitalization, technological advancement, and a resurgence of cultural confidence all point to a promising decade ahead. But no transformation of this scale happens without resistance. Trump's political opponents have framed his presidency as an existential threat, not just to their own influence, but to what they rightly or wrongly call democracy itself. Institutions rarely dissolve quietly, even when their replacement is necessary. History tells us that entrenched powers do not simply fade away, they fight. And while optimism is warranted, so is prudence. As the country moves toward a future of unprecedented economic and technological growth, the question remains, how does the individual safeguard their property and way of life through what could become a volatile transition? Periods of domestic strife are rarely at the forefront of our minds, especially in modern America, where many assume large scale violence is a relic of the past. Yet a sober look at U.S. history reveals a disconcerting pattern. From the founding of the Republic through to the present day, every generation of Americans has lived through at least one significant period of armed civil unrest. Whether these episodes took the form of wars, rebellions, or citywide riots, large scale upheaval has repeatedly forced people from their homes and destroyed their property. On a practical level, this means that no matter when you were born, the probability you would witness violent conflict is strikingly high. Indeed, the data suggests that for any 80-year span in American history, there is nearly a 100% chance of living through a period of armed turmoil that displaces civilians. This isn't to suggest that the United States is uniquely unstable, far from it. In fact, it remains one of the most politically and economically stable jurisdictions in the world. But if U.S. history demonstrates that nearly every American will experience civil unrest in their lifetime, the probability is even higher for those living in countries with weaker institutions or more volatile political systems. The United States is often celebrated as a land of opportunity, yet it was forged in conflict during the Revolutionary War, and it has weathered internal storms from the Civil War to Reconstruction era terror, racial upheavals in urban centers, and the forced migrations of Native American peoples. Even after nearly 250 years, the pattern remains surprisingly consistent. One might assume that technological progress or social development has diminished the likelihood of large scale conflict at home, but history demonstrates that stability can unravel faster than expected. American history is punctuated by periods of violent upheaval that have displaced entire communities, from the Revolutionary War's Loyalist exodus to the forced removal of Native Americans in the 1830s. Conflict has repeatedly upended lives. The Civil War and its aftermath saw entire regions devastated, while labor strikes and race riots in the late 19th and early 20th centuries left cities in turmoil. The 1940s brought the internment of Japanese Americans, and the Civil Rights era ignited widespread unrest, culminating in the urban riots of the 1960s and beyond. Even in recent decades, episodes like the 1992 Los Angeles riots and the Black Lives Matter attacks on businesses in 2020 have shown that political and social tensions can still boil over into destruction. The idea that America has outgrown these cycles of disorder simply does not hold up to historical scrutiny. If we take a step back, a mathematical reality emerges. Consider an 80-year window, the typical human lifespan in any given 80-year stretch from 1776 to the present. At least one of these major conflicts has taken place. More often than not, multiple episodes of unrest occur within that span. That means that the probability of living a full life without witnessing a significant period of upheaval is effectively zero. Traditional fallback options like gold, foreign currencies, or real estate have their place, yet each has limitations, especially in crisis scenarios. Gold can be confiscated or is difficult to transport across borders. Foreign bank accounts may require pre-existing relationships or be subject to seizure. Real estate is not portable at all. As an unseizable, globally accessible asset that cannot be thwarted by civil unrest, Bitcoin is unique. Periods of upheaval often transform money itself into a weapon or a casualty of conflict. Legal protections can disappear overnight, bank runs can empty vaults, and central banks might suspend currency convertibility to prevent capital flight. When chaos descends, the trust that underpins any government issued currency can evaporate quickly. In contrast, Bitcoin is secured by a globally distributed network of miners and node operators. Its protocol ensures that once a transaction is sufficiently mined, altering the record would require an enormous, near impossible concentration of computational power. This characteristic, final settlement, offers a stark advantage over other forms of money. No government agency or armed faction can simply walk into a single office and seize the entire ledger. It is crucial to distinguish Bitcoin from the broader universe of digital tokens. Many so called digital assets rest on centralized platforms or small consortia of validators, making them vulnerable to shutdowns or pressure from authorities. Bitcoin, by contrast, lacks a single point of failure. Its decentralized architecture means that participants in different regions collectively validate transactions. So even if certain regions go offline, the Bitcoin network can continue functioning elsewhere. Moreover, self-custody is a defining feature that allows individuals to hold Bitcoin without any third-party involvement. You could store your Bitcoin in a hardware wallet or even memorize a seed phrase to carry your Bitcoin across borders without detection. Compare this to limitations of carrying gold or large sums of cash. Beyond portability, there is the matter of censorship resistance. In times of crisis, governments have been known to freeze bank accounts or impose capital controls, restricting the flow of money as a means of containing social instability. Because Bitcoin transactions do not require permission from a central authority, they bypass conventional gatekeepers. This autonomy can be vital if one's political affiliation, ethnicity, or personal beliefs suddenly put them at risk. As someone who works in technology, I see how data can be captured, analyzed, and used in ways that might seem far-fetched during peaceful times. Should unrest escalate, the lines between corporate and governmental surveillance can blur, making personal information, including financial records, a primary target. With Bitcoin, you retain more control over what transaction data is disclosed and to whom. That said, privacy is not automatic, and best practices are essential to avoid linking transactions to personal identities. Yet the core design still offers significant advantages relative to legacy systems that broadcast personal details across multiple intermediaries. Skeptics might suggest that even if Bitcoin could theoretically help a crisis, it is too complex for most people, and that the average person will never master the technical aspects of managing private keys. While this is a valid point, we should remember that the internet itself was once perceived as too technical for the average user. Over time, more accessible applications and educational resources can significantly lower the barrier to entry. The trajectory of innovation almost always points toward greater usability once market incentives align. We buy home insurance not because we expect our houses to burn down, but because the risk is too great to ignore. The same logic applies to civil unrest. Recent history from Eastern Europe to parts of the Middle East has shown how quickly stable societies can plunge into conflict when political fault lines erupt. Even in the United States, the record of recurring domestic violence is longer than many assume. One practical approach is to treat Bitcoin as a complementary store of wealth, distinct from conventional assets. It does not require you to abandon real estate, precious metals, or cash reserves. Rather, it serves as a unique hedge against scenarios in which local property and monetary systems come under extreme pressure. When measured against the real possibility revealed by centuries of history of bank closures, capital controls, or direct asset confiscation, having a portion of your net worth secured on the Bitcoin network can feel like prudent insurance. None of this is to say that Bitcoin by itself prevents unrest or solves deeper societal issues. What it does is provide an independent monetary network, one that remains operational even if regional or national infrastructures collapse. Its censorship resistance ensures it will persist regardless of local political climate. Nearly every American generation has witnessed a large scale violence or property seizures, and there are no assurances that the future will be any different. By storing value in Bitcoin, individuals can maintain a level of independence from local disruptions. Through self custody, one's savings are not subject to the whims of any single government, nor do they vanish if a regional banking system fails. To build a monetary network that offers genuine resilience, the Bitcoin community must safeguard its decentralized ethos, prioritizing user education and robust privacy features. In doing so, we collectively strengthen a system that can remain a lifeline in times of strife, not just for Americans, but for anyone who lives under the constant, if overlooked, risk of internal turmoil. Stand ready, stay free, and recognize that the best guard against life's inevitable storms may well be the monetary equivalent of a lifeboat, an asset governed by no central authority and capable of enduring even when the physical world around it descends into chaos. Well said. And finally, we have a article from Forbes that sounded interesting. This was posted on February 22nd. It begins. Bitcoin and crypto brace for $80 trillion US price bombshell. Bitcoin and crypto have soared since the election of US President Donald Trump, though the rally has lost momentum, potentially signaling a serious stock market crash. The Bitcoin price is hovering at just under $100,000 per Bitcoin, up from under 50 at the beginning of 2024, as JP Morgan issues a serious Wall Street warning. Now, as a sovereign wealth fund suddenly kicks off the global Bitcoin adoption race, Bitcoin backing U.S. Senator Cynthia Lummis has primed the market for a major legislation update as Michael Saylor pitches his $80 trillion plan for digital economy dominance. And so it begins. Lummis posted on X, quoting a post by the account of the U.S. Senate Banking Committee on which she serves, that queued up a subcommittee hearing on Bitcoin and crypto legislation and committee chair Senator Tim Scott's nominations hearing. The committee hearing, titled Exploring Bipartisan Legislative Framework for Digital Assets, is set for Wednesday, February 26th at 2:30 p.m. Eastern Time. Lummis, a vocal supporter of Bitcoin and crypto, has campaigned for the U.S. to create Bitcoin reserves similar to its gold reserve and has written a bill that would see the U.S. buy 1 million Bitcoin over 5 years. Earlier this month, Donald Trump's crypto czar David Sachs held his first press conference to announce a bicameral working group tasked with developing crypto regulation focused on stablecoins and market structure and hailing a golden age for crypto. When asked by a reporter about plans for a Bitcoin reserve, Sachs said it was something the group will be looking at. That is one of the first things we're going to look at as part of the internal working group in the administration, Sachs said. We're still waiting for some cabinet secretaries on the working group to be confirmed, but once that's in place, one of our first steps will be assessing the feasibility of a Bitcoin reserve. This week, during an appearance on the Conservative Political Action Conference, or CPAC, Michael Saylor, the founder of Strategy, a so-called Bitcoin treasury company previously known as MicroStrategy that's bought almost 500,000 Bitcoin worth nearly $50 billion, told attendees the U.S. government should buy 20% of the Bitcoin supply to secure the country's dominance of the digital economy. If you want to own the future, you want to own cyberspace, Saylor said. How do you own cyberspace? You own Bitcoin, and then you run the Bitcoin network. You mine Bitcoin, you own Bitcoin. Saylor has published a Bitcoin framework for the U.S. government that includes the creation of a U.S. strategic Bitcoin reserve, said. Saylor predicted Trump and U.S. lawmakers could buy between 4 million and 6 million Bitcoin in as little as 12 months, claiming it would deliver benefits of $50 trillion to $80 trillion for U.S. taxpayers and help drive down the spiraling U.S. debt pile. There's only room for one nation state to buy up to 20% of the network, and obviously I think it should be the United States. I think it will be the United States, Saylor said. In December, Trump confirmed he plans to establish a U.S. Bitcoin strategic reserve. We're going to do something great with crypto because we don't want China or anybody else, but others are embracing it and we want to be ahead, Trump told CNBC. Yes, I think so, Trump said in response to a question about whether the U.S. will create a Bitcoin strategic reserve similar to its oil reserve. In July, then Republican candidate Donald Trump promised to create a strategic national Bitcoin reserve and predicted Bitcoin could eclipse gold's near $20 trillion market cap during an appearance at the Bitcoin 2024 conference. So a little hopium to end this episode. Finally, wanted to highlight this week's featured post on the Bitcoin Fortress Substack, Top 10 Conspiracy Theories That Turned Out to Be True. I had a lot of fun writing that one. And if you like it, please subscribe. It's free. And if you really like it, what I'm producing, you can become a paid subscriber. Don't cost much, $5 a month. All right. And then finally, I want to acknowledge our weekly top boost on Fountain, once again at God's Death with 236 sats. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. And with that, I will talk to y'all next week. Bye bye.